Let's just get into the Nampak results. Really strong performance. We saw headline earnings per share increasing by around 21% and really increasing the geographical footprint across the African continent.
Yeah, I think the results, if you look at them on the whole, they look like quite decent results. Unfortunately, they came in below consensus, or at the very bottom end of their range, which they gave to us, 15 to 25%. You had headline earnings up 15%, and that implies that the second half was very weak. Which is unfortunate. Their top line was flat, and because they sell off some of their SA business, or businesses, underperforming businesses, they managed to pay down some debt, and that decreased their financing costs, which then grew the bottom line. So overall, although it was a good set of results...
Do you hold Nampak?
We don't hold Nampak, but the standout thing, I think, was the increase in dividend. They increased their dividend 30%, and they've now got a dividend yield of 5%, which is
But when a company
very attractive.
increases dividends to that extent, is that a signal that things are going to get better going forward?
I think it is. I think management, if they're increasing their dividends, they're pretty confident that going forward they're going to be able to maintain that. Management don't want to increase dividends and in the next 6 months or the next results have to cut it again. So I think it is a very good signal. So yeah, it looks attractive. I think that whole sector actually looks quite attractive if you look across some of the other packaging companies.
So Nampak would be your preferred pick?
No, it wouldn't be our preferred pick. I think you got Bowler Metcalf. It looks very attractive as well. And Transpaco, but there's not a hell of a lot between them.
JC all share down 1.3% today. Another dismal performance, and we're seeing it across the board. What is your sense with regards to how much more pain we can endure at this point? We're still at a very tight range with regards to what we saw at the beginning of the year relative to now, so we haven't really plunged that much. But it's painful seeing, red across the board on a day-to-day basis. Yeah,
it is. I think it's the same theme that's we've been hashing out for the last few months. It's risk on, risk off. You're getting bad news out of China. Their manufacturing data is not good, and you see the market plunge. US growth also not good yesterday. How much more can it go? I think there's still a substantial way. I think if a worst-case scenario, the euro had to fall over, I think we would see it fall quite a bit more than, or fall a hell of a lot further from current levels. But having said that, I don't think this market's expensive, and I don't think it's cheap. I think it's fairly priced. So I wouldn't hope to see the 20-30% that we saw in 2007, 2008.
In a way, I know that you probably wouldn't mind it that much because it would be an opportunity for you to add more capital to certain areas, right?
We'd be losing money on the way down, unfortunately. So we wouldn't mind it.
In some way. Okay, so Ilovo out with results as well today, posting a 12% rise in first half earnings. What is of concern that going forward is production is going to drop by 10%?
Yeah, these weren't great results as well. I think the standout thing here was the outlook. If their production is going to fall 10%, I think our numbers back at work were about it for 30% increase in headline earnings for the year. They came in at about 12% increase in earnings now at the halfway point, so we'll definitely have to reduce that down. So that's very unfortunate. And again, it's disappointing results. We saw their turnover flat. Exchange rate, there was a favourable exchange rate which helped them grow their earnings, but they're not growing the top line. And this has been an ongoing theme, I think, with Ilovo and the sugar companies, Tongaat as well. I think Tongaat's numbers, if I remember, were slightly better, but it was also a mixed bag. So yeah, not great results.
Tiger Brands, full year earnings up 13%. We had revenue rising 5.8% and saying tough conditions ahead.
Yeah.
And Tiger, of course, down around 1%, 1.09%.
I thought these were very nice results. They came in above consensus. Their turnover was up 6%. We saw their margins increase to just short of 16%, which is above what they target, around about 15%, I think it is. So it was nice results, I thought. Very nice return on equity. And it's fairly priced. Obviously, they've got this big acquisition drive into Africa. They've made a few acquisitions. I think it was disappointing that we didn't hear about another acquisition at these results, because you've seen in the past they're very good acquirers and equally good at selling off companies.
Okay. Sasol up 0.8%. It's one of the only top performers. We'll get into SAB Miller because it's the only second company on the JSE Top 40 that's actually in positive territory. Headline earnings per share expected to increase by 45%.
Yeah, that's a very nice trading update. I think they said at least 45%, if I remember.
Yes, at least, actually.
So I mean, that's a very nice trading update. But obviously, Sasol's a play on the exchange rate and the oil price. So you've got a weakening rand and you've got a very high oil price. That's going to help their earnings and obviously is going to help the share price.
So let's hope the oil price then remains.
Yeah, that aside, though, I think there's fantastic growth opportunities for Sasol. They've got the ever-changing landscape of global energy. They've got their gas-to-liquid technology that is unrivaled. So yeah, I think there's huge growth opportunities. Very nice.
SAB Miller up 0.5%. 276 rand and 25 cents.
Yeah, there's not a lot I can say about that one. SAB Miller looks
With
fairly
two standout
expensive.
companies,
Yeah, I think, as I mentioned just before, Investec upgraded. They went from neutral to a buy. Whether that had a big bearing on the markets, I don't know. But I didn't see any news out of SAB today that would have moved it up besides that.
Speaking of Investec, I know that you hold Investec and dismal earnings that have come through, and also the fact that the share price has been beaten quite extensively. Would you be accumulating at these levels and hope that things would get better? What are you doing with that?
No, we wouldn't be accumulating. We holding our current exposure at the moment. Yeah, it is exceptionally attractively priced when you look at a price to book of 0.8. But then it begs the question: what does the book look like? You know, what is the quality of the book? So yeah, we're definitely not buying it at these levels.
And another company that I know that you used, do you still have exposure to Telkom? Have you sold
no, we sold off Telkom a few months ago. Yeah.
Okay, and anything that you're finding very attractive right now, Andrew?
There are pockets across the market that look very attractive. If you look at the SA industrial companies in particular, your packaging, we spoke about that earlier. Another one of our favourites, construction. You've seen the RT companies. When you look at industrials as a whole, it looks quite expensive, and that's because of your multinational, your SABs, your MTNs, those sort of companies. But when you look at your homegrown industrials, your Grindrods, those sort of companies, it's looking very attractive.
Fantastic, Andrew. We have to leave it there. Great to have you on the program.